The US dollar is subject to some near-term selling pressure. Let's break it down. Now, we are seeing some vulnerabilities to the downside to the dollar. Okay, yesterday we came under a little bit of pressure. Today we're just flat at the moment in early European trading, but it does look vulnerable to some further moves to the south. Now, the reason being is yesterday, do you remember we had on the calendar, Jerome Powell, the Fed chair, due to speak, okay? And he did speak. Now, markets are really running with right now. You remember how I've said before, right? We saw how aggressively markets were pricing in those rate cuts for this year. Remember, it's back to back to back to back to back, okay? However, obviously, those expectations have been largely, calmed because, as I say, that's what they wanted. But, the FOMC needed to bring down inflation, so they really pushed everyone back. They're like, get out, move. So, the markets were a little bit disappointed, but they remained optimistic. And I said to you, any reason for them to try and price in and just get these rate cuts, give us a couple of rate cuts, they were going to run with it. Anything, any excuse to. Now, yesterday, Powell actually gave the markets an excuse to get those rate cuts, to price in, these rate cuts. And essentially, he's slightly softening his stance finally, okay? He's saying that the Fed has made quite a bit of progress. Before he said, we're trying to gradually moving in the right direction. He's just sort of, tiptoeing, but he's saying quite a bit. That's a decent change in language from Powell. It's quite a bit of progress on inflation. Obviously, they need more confidence before cutting rates. Of course, they're going to throw in that caveat. That has to be there because they need to keep an eye on inflation. Inflation continues to head in the right direction for them to cut rates. But the fact that he said there's quite a bit of progress is enough for the dollar bears to capitalize on. Okay, do you understand that? Okay, this is moving in the right direction, closer towards rate cuts, getting more dovish after being hawkish with this higher for longer stance. They're getting more dovish. Quite a bit of progress. Now, let's just sort of summarize everything here, first of all, on a fundamental level. Guys, you see all this information that I'm putting into this video, it just comes like that, right? It's second nature to me. And the reason being is because obviously I have that experience. Nothing beats experience in these markets. Everything that I have learned, I've been able to simplify because a lot of information that's out there in the public domain is extremely overcomplicated and a lot of jargon, and it doesn't make it easy for the everyday person, everyday trader trying to learn macros, understand, why has the price just spiked here because of this fundamental reason? I don't understand it because all this information's over, complicated. But for me, all these years, I've been able to simplify it, make it easy and digestible and actionable for the everyday trader. And that's exactly what I've been able to do. And I've put together in my fundamental bootcamp course, which you can obviously check out if you're willing and keen to really level up your whole game. You can thank me later on that. Anyway, let's continue with the video. Then we had comments also from Fed's Goolsbee yesterday. Fed's Goolsbee makes a case for a rate cut in the coming month. He's citing warning signs of an economic slowdown. He said Fed downward pressure on demand will get worse as inflation softens. He's basically been quite downbeat. Okay, he sees risks to the economic outlook in the United States. And remember, we start cutting rates when we're seeing cooling in the economy as well. Not just talking about inflation, obviously, but also the economy. If the economy is starting to slow down, there's risks to the downside to economic growth, then we're going to need to cut rates. Okay, so you see they're gradually getting towards this softening in their stance, becoming a little bit more dovish, and the markets are running with that, and that makes the dollar vulnerable to some downside. Now, we're going to look at the dollar in a moment, but just want to show you. Yesterday, we had decent job openings, and this is one of the Fed's favorites. They like looking at job openings, okay? It's a good gauge to the health of the labor market as well, outside of the, NFP numbers. But these numbers were bullish, 8.14 million. Okay, bullish numbers there, bullish job openings, which indicates the labor market is still tight. So, when we look over the medium, the long term, the dollar still has the upper hand versus its peers. But right now, markets are really fixated, focused and locked in on getting this rate cut, deliver this cut. They're still optimistic that can happen in September. And it may be one more before the end of the year. Okay, that's what they want. So that makes dollar vulnerable. Okay, remember, obviously, all this upside pressures, as we were looking for via the TFTC, that guys know when we're heading to the downside, I said, watch it. Watch the delusional markets get, slapped in the face. Because you know, they were pricing in too many cuts, and obviously dollar stays to rebound as we were looking for. That was beautiful. Now, anyway, my point is we're still structured to the upside, but I'm talking near-term vulnerabilities for the dollar to the downside. Do you understand? Near-term vulnerable. I'm not saying dollars now, you know, selling off. This is game over. No, I'm saying that now we capitalize on this near-term drop. And if we look, it makes sense technically for us to come down towards this 105 area. Obviously, we've got this next zone, okay, this zone. It's also psychological, right? 105, nice psychological level. But then also coinciding with that, we've got this trend line, okay, which has been supporting the price to the upside since the commence of this year. All right. So it would make sense for us to see us come down towards this area. All right. And head there. And obviously, as I said, this makes way for outperformance. Well, near-term upside for the dollars pairs, euro dollar, GBP, Aussie dollar. You know, all these pairs can capitalize on this near-term dollar downside. Okay, obviously be careful at the end of the day because we do have still some high impact events, which we'll talk about in a moment. If we look at the Fed's CME watch tool, it's not the Fed's, it's the CME Fed watch tool. It's not theirs. Now look at the probability for September. It still remains around a 65% chance. Okay, so we're going to really focus on inflation data heading into September and also, of course, labor market data, because we need to know if the labor market data is going to be inflationary or disinflationary. Okay, is it indicating, because remember, if we've got a decent labor market, i.e. jobs being added, wages are high, unemployment rates low, that's inflationary. Okay, that's not going to help bringing down inflation and get the FOMC close towards rate cuts. If obviously we're getting a worsening in the labor market, of course, that is going to get the FOMC ready for rate cuts because we've got less people in the workforce, less wages potentially stimulating the economy and prices. So, you know, obviously it's been a big, good start to the week. Excuse me. It's been a start to the week with labor market data, JOLTS job openings there. And then today we've got privately conducted payrolls, i.e. ADP non-farms, okay, non-farm employment change. And then, of course, that comes ahead of weekly unemployment claims from the United States. Huh? Oh, it's a bank holiday, isn't it? It's bank holiday in the US, so that's not going to be released. That will come out. I don't know when that's coming out, the weekly unemployment claims. Anyway, all of this ahead of non-farm payrolls, okay? Non-farm payrolls due on Friday. That's the big one. Let's see if this proves to be inflationary or disinflationary. It doesn't look like we're getting the weekly jobless claims on Thursday as per usual because of the US holiday 4th of July. All right. But near-term potential vulnerabilities there for the dollar, as I say, just given this softening in tone from Jerome Powell. Guys, I hope you found value in this brief dollar market update. As I always say, this is only just scratching the surface. There are opportunities, of course, to capitalize on this information. There are tons of other opportunities on a macro level that we dive deep into via the TFTC. And look, TFTC aside, if you're just wanting to level up your macro knowledge and be able to identify the opportunities and then execute, right, with strong macro belief and bias to tie in and complement your technicals, you can check out the Fundamental Bootcamp if you wish. We have a number of students that are coming on board now, which are passing funded challenges, which are getting payouts, which is nice to see via DM. Guys, if you are coming on board, by the way, you're DMing me, make sure you leave reviews. And for those people that are interested, check out those reviews anyway on what. Other than that, please do smash up that subscribe button, hit the like button, stay lit, stay blessed, and let's get it.